Hi everyone, and welcome to the Octa FX Q&A. My name is Ambrose Ebuka, and the Q&A is a special session where you can ask me any questions and I'd answer your questions. We'd also do some analysis together. But before I go into full details of the Q&A and answer your questions, you can go ahead and type in the chat your name and where you're watching me from. So go ahead and type in the chat your name and where you're watching me from. Mm. All right, let's see who we have in the chat. Oladele says hello. Josh from India. Oladele says he's from Nigeria. Eniola is from Ibadan. Rich says he's from Nigeria. Yvonne is from South Africa. Go ahead and type your names and where you're watching me from in the chat or in the comment section, guys. Sling says from Nigeria. Okay, welcome guys. We've received your questions and we're going to deal with the most frequent ones. But while I answer these questions, if you don't see your question, you can go ahead and ask in the comments. There will be a session where I answer questions from the comments. So if I answer these questions and you don't see your questions, you can check, you can type your questions in the comments and I will look at the comments to answer your questions. Patrick from Ghana. Welcome, guys. Massive welcome to every one of you. So I'm going to go ahead and start with the first question. How can I start trading? Well, if you've made a decision to be an independent Forex trader, then you need to understand that there is a process to it, right? And this process includes, the educational process, and the educational process would be obviously the basics where you learn about currencies, pips, trends, market structure, generally, the things that can help you approach the market and understand what you see on the charts, right? And then you also move over to technical aspect of trading, the technical analysis, and the fundamental aspect of trading as well, which includes trading with economic events, trading with news and trying to analyze the markets through this economic events and reports. You should also learn about risk management as well. And this is just going to help you mitigate the effects of unsuccessful trades. And also you can learn about trading psychology, which would help you with emotions. And a good place to start learning would be the OctaFX website, www.octafx.com, or you can also check the OctaFX YouTube channel. There is a playlist in the description, an English playlist that you can click and watch these videos to understand how to trade. Okay, and you can also create a trading account. There's a link in the description that you can use to create a trading account. You can practice what you've learned and you can go live when you're confident enough to start trading a live account. So these are some important tips and things that you can do to get started with trading. Let's look at the second one. I'm a newcomer to OctaFX. I need someone to put me through, and yet I can get this educational materials through the OctaFX trading app or on the OctaFX website and the OctaFX official YouTube channel. Now you can take advantage of this educational materials to increase your trading knowledge. If you look at the Octa FX YouTube channel, you can get live trading sessions, webinars, and market outlooks to keep you updated with what's going on in the market. Now, to make a deposit with Octa FX, I'm just going to walk you through how to make a deposit with Octa FX and start trading. So let's say you have a demo account. Let's use this example. Let's say you have a demo account with Octa FX. What you want to do is obviously to click the plus sign at the bottom right. So you go to where you have your trading accounts. To make a deposit, you first have to create a real account, right? So you click plus, the plus sign at the bottom left, and then it's going to take you to a new page where you have to choose your account, and you can click on configure on the Octa FX MT5, and then you're going to also 1 second, guys, let me go back a bit. So you'll be directed to a new page where you can choose or change from a demo account to a real account, and you choose your leverage, and also click on create. So you're changing from a demo account to a real account, and then the next thing you want to do is to make the deposit, right? So your account has been created, and then you can go ahead to make your deposit. Now there are multiple options that you can do. Okay, so when you make that transfer, your money will be reflected, and then you just come to your real account and click on trade to start trading. Okay, there are multiple instruments, is the USD JPY, multiple currency pairs that you can choose to trade from with Octa FX. All right, so that's just to answer your question on how to make a deposit, and an extra bonus on how to just place your trades and choose from the multiple instruments, currency pairs that you can trade with Octa FX. All right, let's look at the next question. Okay, this person says, why does the price always go up first when I enter a sell position, and after taking my money, it goes in my direction? Should I just wait for the price to go up first and enter once it comes down to my entry price? Well, the market is affected by a lot of factors. News can drive prices, and you experience this a lot with your trading. If you experience, opening trades and then, your trade going in the opposite direction before it goes in your favor. If you experience this a lot, then you might have to review your strategy. You could be entering that trade too early. Okay, and remember, when you analyze trades or when analyzing, you should look at what's happening on the left to identify what could happen on the right. Right, so you should look at what's happening on the left hand side. Let me see if I can show you guys. Okay, so when I say what's happening on the left, if you open your chart right now, let me expand this a little bit. So if you open your chart, you're seeing that the market is coming from the left to the right, right? So to help with analysis, you have to look at these areas, identify where is supply, where's demand, where could price possibly make a retest. Identify all this before you can choose, before you can understand what's going to happen in the future, or what could possibly happen in the future. So that's what I mean by looking at the left to identify what could happen on the right. You can also use pending orders on your trades. So if you enter a trade too early, you can use pending orders. That way you have a higher chance of executing that trade at your preferred price. 1 second, guys. All right, so let's question, what are the types of non-probability sampling? So I think this is not really related to Forex, but non-probability sampling is a sampling technique, and in statistics, sampling is a method used by researchers to determine a representative segment of a larger population that will then be used to conduct a study. So non-probability sampling is a technique where the researcher selects samples, based on the subjective judgment, other than just using non-probability sampling would be quota sampling, self-selection, convenience sampling, judgmental sampling. But this is not really Forex related. So just if you're asking questions, you can ask questions that are related to Forex anyway. So let's look at the next one. What trading style fits my personality? So this depends on your personality and schedule. And what I'm trying to say is that to identify what works for you, there's some really important things you need to understand, and this could be your risk appetite, your trading account size, your availability, right? How available are you to place trades, to analyze the market, to keep updated on what's going on in the market? What's your risk appetite? And what kind of person are you in terms of, are you someone that likes a fast-paced results, or you're patient enough to wait for your results? So if you're someone that likes fast-paced results, then or scalping styles can be good for you. If you're a patient person that can wait for your results, then you can look to implement swing trading strategies on your trading, because this involves a longer time for the trade results to be achieved, or for the financial result of the trade to be achieved. Okay, so these are some factors that you can consider to identify what trading style will suit your personality. And you can always practice, to identify which style you're comfortable with, and you can refine these strategies to get the best probability setup. Okay, let's got the next one. How can I analyze the market? So there are different ways to approach the market, but the most used type of analysis in Forex by traders are fundamental and technical analysis. Okay, and fundamental analysis involves the use of social, ethical factors to identify or to analyze price movements or market movements. And one way, or a place where you can get this economic news or reports on what's happening in an economy of a country, what's the result, or what is the reports from the CBN, the central bank governor, or the chairman, or the central bank chairman of that country. One place you can get that would be the Octa FX economic calendar, and you can find that if you go to octafx.com. Just gonna do like a quick rundown on how you can get that. Enlarge my screen. Let's see while that opens. So guys, if you don't see your question, you can go ahead and type your questions in the comments. I'll look at the comments to answer your questions. And there is also a promo code that I will be revealing at the end of this Q&A session. There's a promo code I'll be revealing, and this promo code would give you 100% bonus to your deposit. So stick with me to the end of this Q&A session, and I will reveal the promo code for 100% bonus to your deposit. So let's see. So to access the economic calendar, remember, the economic calendar gives you reports on the economic events happening in a country. And to access this, you need to go to the OctaFX website and go to analysis and education. And then you want to come down here to economic calendar. Okay, so you go to analysis and education, and then you want to come down to economic calendar. So that's how you can get I'm trying to wait for it to load, but that's where you can get reports on economic events happening in different countries. And it's also indicated by, the currencies that are affected by these reports. Like you have AUD for Australian dollar, so you know that this news is going to have an effect on the Australian dollar. And then you have JPY, Japanese yen, Chinese yuan, Great Britain pounds, and you also have for euro, you have for the Swiss franc, you have for the Canadian dollar. So you can just use this to keep to stay updated. Okay, let's look at the next question. How can I identify a trending market? An uptrend or a downtrend, then the market is ranging, right? It's just consolidating. Let me show you guys an example of what I mean. One second, guys. Okay, trying to get my push to the side. This is this one. Like this. If the market is not moving in an uptrend or a downtrend, I'm still gonna give you guys I'm still going to label this for you guys. Then you can say the market is if it's not moving in an uptrend or a downtrend, then you can see that the market would be ranging, either an upward direction or a downward direction, right? So if the market is not moving in an uptrend, let me delete that. So if the market is not moving in an uptrend or a downtrend, then you can say the market is ranging, or you can also say it's consolidating, right? And how do you identify a trend, right? You can use simple price action. Now for an uptrend, you identify an uptrend by all right, guys. Just let me know if you can hear me in the comments, guys. Let me know if you can hear me. If you can hear me, go ahead and type in the comments. Just want to be sure that you guys can hear me. Okay, all right. You guys can hear me. So how can you identify a trending market? Now, I was saying there are two types of trends. We have the uptrend and we also have the downtrend, right? So here is a description of, or an illustration of what an uptrend looks like, right? And here's also an illustration of what a downtrend looks like. Now, I said if the market is not moving in an uptrend or a downtrend, then you can say the market is ranging, right? Let me just indicate, let me label this. This is ranging. All right. So if the market is not in an uptrend or a downtrend, then the market is ranging. Now, how do you identify trends? Trends are made up of swing highs and swing lows. Now, for an uptrend, you need to have at least two or more consecutive higher highs and higher lows, right? You need to have higher highs and higher lows, right? Two or more. That's when you can say, oh, this is an uptrend or the market is in an uptrend, right? And for a downtrend, you need to have at least two or more lower highs and lower lows, right? You need to have at least two or more lower highs and lower lows. And when you see the market make consecutive higher highs and higher lows, you can say the market is in an uptrend. And the market is making consecutive lower highs and lower lows, then you can say the market is in a downtrend. Okay, so that's how you identify a trend in markets. Let's look at the next question. Are certain currency pairs better than other currency pairs? Well, in the Forex market, we have a lot of currency pairs. We have a lot of instruments that you can trade, and not this all these currency pairs don't behave the same during economic events, right? We have some major currencies like the Euro USD, USD JPY. We have GBP USD, which is the pounds against the dollar. We have NZD USD, AUD USD. All these are currencies that have high liquidity and high volatility, right? We also have exotic currencies or crosses that don't really have much volatility and liquidity like the major currencies. And by liquidity or high liquidity, I'm talking about the measure of market participants actively trading a currency pair, right? So if you're a kind of trader, if you like fast-paced currency pairs, then the major currencies can be a suitable option for you to trade. So it all depends on your trading style. There are traders that actually analyze, exotic currencies or currencies with low volatility and still make profit. But you wouldn't expect the results to come faster from low volatility or low liquidity currencies as it would for major currencies like the GBP USD or Euro USD. Okay, next question. How can I deal with emotions of a losing risk, at least risk not less than 2% of your trading account on a trade? Then you would have more opportunities to place more trades. Okay. So guys, like I said, if you don't see your questions, you can ask your questions in the comments. I'm looking at the comments to see if there are questions, and I'll be answering them very soon. So if you actually need to take a day off or two after having the effect or experiencing unsuccessful trades, then you can. But remember that you need to have like a practical approach and a positive mindset to the market. So you don't want to just start revenge trading or start over leveraging on your trading account just because you want to make back. Remember, you have to be on a very you need to have like a practical mindset, and so that you can be able to analyze and place trades. You don't want to be making harsh trades, right? There would always be the market would always create opportunities for you to place trades and make more profit. Now, speaking of opportunities, do you know that Octa FX has started the festive season? And as always, there are ace high conditions. You can get up to 15% lower spread, and your leverage has been increased now to 1 to 1,000, and you can also get a doubled deposits. So if you take part until 26th of December, you can actually take part in this and take advantage of this higher spread, 50%, sorry, lower spreads actually. and 1 to 1000 leverage. So this is a very good opportunity, and the opportunity seems very good to pass up. So you don't want to miss your chance, guys, until 26th of December, and everybody takes part. So don't miss it. Okay, guys, we are at the Q&A session right now. So I'm going to be looking at the comment section to see if there are questions that I did not answer. So I'll be looking at the comments. So guys, if you have questions, you can go ahead and ask your questions now in the comment section. So someone is asking about how to trade when a new swing high has been broken, and where should be your stop loss. So two things you need to consider, right? You need to consider, or you need to look at the time frame. Let's go to an empty chart. Give me a second. Let's see if I can put this. Okay, so let's just use this as an example, right? Let me identify the. Just delete this one. Choose a new one. All right, so if you're trading the breakout of swings, obviously a well conservative way to trade breakouts would be to trade at execute your orders at the retest of that breakout, right? Or at a pullback. Okay, so let's use this zone for example. Let's use this higher high. Let me just change the color. Let's use this one instead. Right. So this is actually before this was the most recent swing high, and what happened? Price broke above this swing high, right? So a more conservative way to trade the breakout of a swing would be to execute your orders at the pullback, right? So that if you're, let's say I'm executing an order here, if I want to put my stop loss, it's going to be closer to the swing high than executing just at the breakout where I have to now put my stop loss, probably below or at the close of this candlestick, right? So you can wait for a pullback after the breakout and then execute your orders at that at that pullback, so that your stop loss can be closer to the swing high or just a bit below the swing high. And also, like I said, you have to pay attention to the time frame, right? Because the time frame also matters. This is a 4-hour time frame, and we're looking at a stop loss of about 49.50 pips, right? So it's going to be smaller on a lower time frame, and it's going to be higher. The amount of pips will be higher on a higher time frame. So that's something that you should take advantage, that you should keep in mind, actually. But that's also something you should consider when you want to trade the breakouts of a swing. Okay, how do you detect if the market is in an uptrend or downtrend? I just answered that about trends, or how to identify trends. Consecutive swing highs and swing lows. How do you select a pair for swing trading while there is so much noise of news? So first, you need to understand that with swing trading, you're looking at weeks, right? Weeks, you're looking at months, you're looking at a longer time to hold that trade. So if you're going to be swing trading, or if you're going to be applying swing trading strategies on your trades, in terms of analyzing through news, then you need to look at news that would have a long-term impact on that instrument, right? You're going to look at news that will have a long-term impact on that instrument, so that you don't execute your trades and then probably NFP or CPI just comes up and takes the market or the trade in another direction. So guys, if you don't see your questions, or if you haven't answered your questions, you can go ahead and type in the comments. I'm scrolling through the comments to see if there are questions that I haven't answered yet. How much pips how much pips intake gold trade with stop loss? So if you're asking about how many pips you should use on your stop loss or use as your stop loss on a gold trade, uh let's look at gold. So gold is a very volatile pair, right? Unlike currencies, gold can move wildly up and down. Gold can move up to 300, 500 pips in a day, you know. It's a very volatile pair. So if you're looking to trade gold, first I would say you should actually take a bit of time to understand how the gold market works. Doesn't really move like currencies. That's one thing you should understand. And also to identify your stop loss, you can also use market structure, previous swings. But what I'm going to say about gold is that you should not risk more than 2% of your trading account while trading gold, because the movements are highly volatile with gold. Let's go to the lower time frames. Hmm. So with gold, price action just tells us everything, right? Price action shows us everything. So let's say, for example, let's use what's happening, right now in the gold market. Where is my? Okay, now let's use this one. Let's say that with what is happening in the gold market right now, we can obviously see that it's consolidating, and this is the 1 hour time frame. So what this means is that gold has failed to create a clear direction since yesterday, right? A clear direction. Is it going down? Is it going up? No one knows. It's consolidating, right? But I believe that after, give me 1 second. I believe that after today's FOMC or after the news today, then we're going to see we're going to see wild movements from gold, because obviously we're going to be expecting reports from um, reports that would be related to the US dollar, and we know that these reports have usually have effects on gold. So we're going to be looking at either breakouts to the upside or breakouts to the downside after this news has been released. We have about four high impact news on the US dollar today. We have the FOMC economic projection, we have FOMC statement, we have federal funds rate, we have FOMC press conference. So these are economic events that would be, causing a high of effect or a high volatility, bringing about high volatility to the gold market. So if you're looking to trade gold right now, I would say that you should be patient enough for the news to be released, so that you can have a clear, excuse me, so you can have a clear direction of where the gold market is going to. And your stop loss can obviously be determined by your risk appetite, or you can also look at, swing highs if you're going to be selling, or swing lows if you're going to be buying. But generally, just make sure that you're not risking more than 2% of your trading account. That way, you have more opportunities to place more trades. What's the minimum amount? Godwin Edits. Okay, asking from Nigeria. Minimum amount you can start trading with Octa FX is $40. Guys, I'm still looking at the comment section to take your questions, so you can go ahead and ask in the comments. Does indicators really give entry and exit signals? Well, I've tried some indicators while trading, and with indicators, you have an added advantage. It's like an extra hand for you to understand, what to do next, what the market is doing. It's like having a combination of, uh, you know, confirmations, or things that you can put together to say, okay, I have strong confidence, or I'm very comfortable to trade to place these trades. And then you have your trends, you have your supply and demand, and you have your indicators as well that can just be like an added advantage to tell you what would probably happen in the market. So just like the name goes, indicators, they can be a good indicators in conjunction with what the RSI is saying. So you can just combine this analysis and your indicator to get good entries. All right, guys, I think I'm going to take one more question. I'm going to take one more question. Okay, what makes you a profitable trader? So aside the fact that I'm able to make consistent profits from the markets, over time, profitable trading, or as a profitable trader, I'm able to identify what's going on in the market, identify high probability setups, identify when to trade, when not to trade, also identify, or also, I'm also able to manage my emotions with trading as well. And this is something that you can also apply to your trading to become profitable, in the trading world, right? If I should call it that. But yeah, it's a combination of things. You have to be disciplined, you have to be patient, and by disciplined, um, discipline will just help you, or when you're disciplined, it's just going to help you stick to strategies so that you don't probably try a strategy for just 1 week and then you're saying it's not working. When you're disciplined, you're able to try strategies for a longer period of time, yeah, and stick to these strategies, and also stick to your trading plan. Discipline is also going to help you with that, and patience would help you wait for the market to come to your zones, because when you do your analysis, you're going to have places where you want the market to get to, or yeah, places where you want the market to get to execute your trades, and patience will help with that, so that you don't just come to the markets and start making rash decisions. You just go ahead and start clicking on buy and sell, you know. So these are the things that can help you become profitable, and also risk management as well. Being able to manage your risk, not just going ahead to over leverage, and yeah. Okay, guys, it's been an awesome and an amazing Q&A session. Remember, we have another episode, so thank you very much for participating in this Q&A. Don't forget to use the link in the description to send in more questions, and I'll answer them in the next episode. Remember that you have ace high conditions, you have 15% lower spreads, and you also have a 1 to 1000 leverage and a doubled deposit. So you can take part in this until 26th December, and you don't want to miss this chance. I'll see you guys later.